Hello and good morning. I am Ying from SGTech. Welcome to our Go Global webinar series covering ASEAN. So today's topic will be on Indonesia's legal landscape and tax regime. The session is organized by SGTech in partnership with Orisa International and also supported by our payment solutions partner, Western Union Business Solutions. So this is actually a part 2 of our Indonesian series. Yesterday, we learned that Indonesia is the most populous country in Southeast Asia with an average population age of about 30 and has been growing at a very steady state even during the pandemic. So today, we'll be delving more into the legal aspects and taxation issues that companies intending to enter the country should know. So in addition to that, we'll also be touching on Indonesia's emphasis on smart cities with its 100 smart cities movement that resulted in 97 cities successfully attaining the smart city status. So with the World Bank projecting that nearly 70% of Indonesia's population will be living in cities by 2045, it would therefore be paramount for these cities to be livable, free from traffic congestion, pollution, and also other disasters arising from a lack of sustainable development of the cities. So before we begin, I would like to highlight some house rules. Firstly, a gentle reminder that this session will be recorded and uploaded to YouTube for our marketing and archival purposes. Secondly, you can type your questions in Zoom Q&A box throughout the session. We will be doing a consolidated Q&A at the end. So do state your company name as well as your name before asking the question so that we can tailor to your needs. So this is our agenda for today. Very excited to welcome our panel of speakers to share with us. Firstly, we have an overview of Indonesia's legal landscape for tech companies by Joel. And then we'll be covering Indonesia's tax regime for tech companies by Ms. Nurmia. And lastly, we'll be doing a deep dive into the Indonesia's readiness for big data adoption in smart cities by Juan. Okay, so let's welcome Joel on stage. Firstly, let me introduce Joel. So Joel is a partner at KhattarWong. Joel advises companies on corporate ventures and venture capitals in cross-border investments, acquisitions, and joint ventures. So he has a particular experience in Indonesian market where his clients include major technology companies, financial institutions, retailers, payment companies, and also venture capital fund managers. So he is also a member of Tech, which comprises a team of highly experienced lawyers with expertise in investment funds, tax structuring, investments in tech companies, mergers and acquisitions of tech businesses and assets, as well as commercialization of digital assets. So let's welcome Joel, please.
Thanks very much, Ying. Can everyone see my screen?
Yeah.
Thank you.
Great.
So thank you very much, Ying, for that very warm welcome. Good morning, everyone. It's a pleasure to be here. Thank you, SGTech, for the kind invitation. And it's great to be able to, as I was sharing with the other panelists earlier, finally put on a batik shirt and talk about Indonesia to an audience. So I'll keep my presentation fairly short. I'm told that we have a Q&A at the end, and nobody is really interested to listen to a boring lawyer talk on and on about laws in Indonesia. But if you have any questions, you can, please feel free to put them in the comment section, as Ying mentioned earlier, and we can try and address these towards the end. All right. So if you can all see my slides. Today we're going to talk about investing in Indonesia's digital economy. And what a digital economy it is, right? You must all have heard about it already. Indonesia, as I always say, is a country of superlatives. It's the largest economy in Southeast Asia and expected to become the 7th largest in the world by 2030, surpassing more mature economies like the UK and Germany. It's the 4th most populous country in the world, home to the largest Muslim population, 2nd largest Twitter population, 3rd largest Facebook population, and 4th largest unbanked population. So this creates lots of opportunities for digital businesses. It's the largest archipelagic country in the world. It spans 17,000 islands. Some of you here might have visited some of these islands already. Bali, of course, being the #1 tourist destination, which I was very happy to note, recently reopened their borders to international tourists, although sadly not yet Singaporeans for now. So a little bit more patience among my Singaporean friends, but hopefully we'll all soon be able to visit Bali again. Now, what does it mean when you're dealing with a country that's as big as Indonesia? From North Sumatra until Papua, the eastern to the western ends of Indonesia, that distance is the breadth of continental South America, or the distance between London and Baghdad. What does it mean then for technology businesses when you're dealing with a country this big and this diverse, where the geography and the diversity of the country has perennially created issues in distribution? Well, I would suggest to you, and certainly the figures would suggest to technology companies, that this creates incredible business opportunities for technology companies, where digital technologies can be used, can be employed to solve some of these perennial problems of distribution. Referring to this report that many of you would already have come across before, jointly produced by Google and Temasek and Bain and Company. The report was initially published in 2016. And at that time, Indonesia's digital economy was worth about $8 billion in 2015. In the last 5 years, this has quintupled. It's quintupled to 44 billion. Over the next 5 years, it's expected to triple again to $124 billion. So if you look at the chart on the left, this shows an exponential curve in the growth of the Indonesian digital economy. The pandemic has not slowed down the growth of the digital economy. In fact, it has accelerated digital adoption, not just among consumers, but among merchants as well, many of whom are now selling online for the first time in their lives. However, and this is a view that many commentators and many observers will share, Indonesia is a country that, especially among a Singaporean audience, I do need to forewarn you that Indonesia is a country quite unlike Singapore. This is an excerpt from a Global Business Complexity Index rating by TMF Group that ranked Indonesia as the most complex market in the world to do business. And it says, Indonesia's position as the most complex market globally is due partly to its traditional legislation, its labor laws, which are aimed at protecting the workforce from exploitation, make it very difficult to take disciplinary action or to sack underperforming employees. These regulations are regarded as archaic by outsiders and remain one of the major deterrents to foreign investment in Indonesia. The negative investment list, which I'll share about in a little bit, which restricts the percentage of foreign investment within each industry sector, is regarded as one of the primary obstacles to business operations in Indonesia. However, and this is what I want to talk about today, in November last year, the Indonesian government pushed through a major piece of legislation called the Omnibus Law. And the Omnibus Law is a giant act of parliament that seeks to reform some of the most complex areas of Indonesian foreign direct investment, including in tax, which my colleague Nurmia will share about later, employment, business licensing, and foreign investment. Okay, and I'll blast through the next few slides very quickly. The good news among all of you today is that foreign investment regulation has now been streamlined and it's now much easier to start for a foreigner like many of us among the audience to start a business in Indonesia. The licensing regime has been streamlined, okay, so that it now becomes a risk-based evaluation and licensing model. The negative list, that constant bugbear of foreign investors that used to impose limits on foreign ownership in many business lines, is now a thing of the past, having been replaced by the positive list, which says that all business fields in Indonesia are open to investment, except for a very small number of business activities that are either closed because for some reason or other they are regarded as controlled, or those that are only carried out by the central government, such as the management of national museums, etc. But by and large, anything that a foreigner, any business that a foreigner might want to do in Indonesia is, at least in theory, 100% open to foreign investment. Now, I do need to add a caveat here that being open to foreign investment is one thing, but very often specific sector regulators like the Indonesian Central Bank or the Indonesian financial services regulator will impose its own foreign investment, foreign ownership and foreign control requirements on not on Indonesian companies generally, but on specific license holders. So if you had any aspiration to set up, for example, a payment services provider or a peer-to-peer lender, those might be subject to foreign ownership and foreign control restrictions. Talk to your lawyer before applying for that license, all right? Labor law reform, something else that's very important. Especially for perhaps not among technology companies that generally employ fewer staff and have fewer assets in Indonesia, but you'll be pleased to know that many of the earlier vexing regulations have now either been rolled back or been diluted. So there are now more grounds, for example, on which an Indonesian employee might be dismissed. The statutory severance packages has been reduced, and work permit application processes for foreigners like myself have now also been relaxed. Okay, so what next? Is the question that everybody is asking. Well, I would suggest to you, as I did in a recent LinkedIn post, that there is probably not a better time to think about investing in Indonesia or expanding to Indonesia like there is today. Probably no time in Indonesia's modern history have the regulations been so conducive to foreign investment. And of course, you know, that is not to suggest that you should rush in blindly without doing your research, but it's definitely the time to pick up the phone to your advisors or perhaps to your Indonesian partners and to have these discussions internally, as I know you are, about whether or not today, you know, now is the time to expand to Indonesia. I've come to the end of the 20 minutes, which I'm told I'm given. Just a few quick slides to introduce the firm. We're a top 20 firm headquartered in London. For those of you who are Singaporeans, you might know us through our partner in Singapore with us, KhattarWong. We're a full service firm in Singapore, 180 people in this office here, and we advise clients of all stripes. Here's a picture of my ugly face, but importantly, on there are my contact details. Should any of you, decide to reach out to me after this conference, and SG Tech and Ying Ying will be sharing the slides to you after our session today. So for that, with that, thank you very much, ladies and gentlemen, for your kind attention this morning. I do look forward to fielding your questions in the Q&A session later. Thank you once again, SG Tech, for your invitation. Ying Ying, I yield the floor to you to introduce the next speaker, please. Thank you very much.
Thank you, Joel. Okay, so next up, We would like to remind the audience that you can share your questions in the Q&A box. Okay, so we'll be inviting Nurmia, who is the director of Chekindo's Indonesian's office. So Nurmia has over 10 years of experience in business consultancy, incorporation and licensing, market research and entry strategy, product registration, as well as outsourcing. A regular speaker at events, she is always willing to share her knowledge about incorporation with the companies that are interested in Indonesia, as well as halal certification in Indonesia with the prospective companies. So let's welcome Nurmia, please.
Okay. Thank you, Ying, for being everyone. I hope. Oh.
Sorry, I think Nurmia is facing some connection issues. Nurmia, we still can't see your screen.
Yeah.
Maybe it will help if we turn off our videos. Yeah, we can try again.
Okay. Okay, so apologies everyone for the technical issues. Hopefully now will be much better. So once more, thank you very much, Ying, for your very warm introduction. Good morning, everyone. I hope everyone's still very excited here after so interesting presentation from Joel, my friend, which we also previously met in previous events before. So thank you EduTech also for inviting us, Chekindo or Incorp, to present about the tax regime for tech companies in Indonesia. Sorry. Okay. All right. So in this session, we will be discussing about firstly permanent establishment overview, just a quick summary, tax overview, income tax and value-added tax exemptions, tax compliance, and also tax policy for the tech companies. So let's initially get started with this most common permanent establishment overview in Indonesia before going further to the tax regulations and practice, so that we have more overview on the type of the permanent establishment. There are two most common permanent establishment type. The first one is the limited liability companies, and then the representative office. And here are the major differences. As you can see, for the shareholders, for the limited liability company, or we call it a PMA company for the foreign-owned company, it is required to have minimum 2 shareholders. As for the representative office, no shareholders required. And then organization structure, for the company, minimum 1 director, 1 commissioner, and for the rep office, only chief of representative office. And for the PERAP capital, the minimum investment plan still the same for 800,000 US dollar rupiah, or 1 million Sing dollar. However, since this year, there is new regulations that the minimum PERAP capital is also 800 US dollar, or equal to 1 million Sing dollar. Because previously it's the 25% for 200,000. However, now the regulation has been updated to 1 million Sing dollar as well for the PERAP capital. And for the rep office, there is no PERAP capital required. And for the business activities, for the company, it is allowed to conduct full business activities that are open for foreign ownership. However, the rep office is limited to research, marketing, buying and selling agent, and not allowed to generate revenue. So, if you will be if there will be some sales generating from the rep office, the sales should be conducted from the parent company overseas. Sorry, a second. All right. And then for the tax overview, yeah, this is just very briefly. Basically, I think every one of us know that basically the tax is mandatory contribution to the company, to the country, or by individual or entities that are coerced by the law, with no direct compensation and used for country needs for the greatest prosperity of the people. And these are also the legal basis for the income tax. The latest one, Law of Republic Indonesia, number 36, year 2008, and the value added tax number 42, year 2009. For the tax collection system, there are three ways how to collect the tax. The first one, the self-assessment system. It means us, the taxpayer, will do calculation, payment, and reporting by the taxpayer. And this is applied for the central taxes, like income tax and value added tax. And the second one is official assessment system. The tax assessment letter issued by the authority, and this for local taxes mainly, like a land and building tax or vehicle tax. And the third one is withholding system. The tax is deducted by third party, then the third party will issue the proof of tax cut, and then it will be, the nature will be creditable or final. The creditable means the withholding tax amount can be used to decrease the income tax payable at the end of the fiscal period. And it's final, it means the revenue from the withholding amount is not included on the total revenue by the end of a fiscal year. So there will not be a double tax applied. Also, the withholding system can be used for the check and balance for the tax compliance. Now, this is the income tax. Who are the subjects for individuals? If it's for an individual, it means those who resides or presents in Indonesia for more than 183 days within the 12 months period. Or individual doesn't reside in Indonesia, but doing business and receive income from Indonesia. Then the entity registered in Indonesia. And for an entity not registered in Indonesia, but doing business and receive income from Indonesia. For the object, individual receive income more than non-taxable income, which is more than 54 million Indonesian rupiah per year. And also the object profit from business and other activities, also like dividend, interest, royalty, and other income. And taxpayer, we need to have the taxpayer identification number, or in Indonesia, we call it NPWP. There will be also monthly and annual tax reporting for the compliance. And the reporting now is conducted through the e-filing system, the online tax system. For the corporate income tax, here are the there are Article 25 for the monthly installment, or the Article 29 for the underpayment. Now the rate has been decreased to 22% from the net profit. This is also one of the positive changes from the omnibus law, yeah, which has been shared by Joel earlier also. Because previously, or 2 years ago, the corporate income tax rate in Indonesia is 25%, but now has been decreased from 4 to 22% from the net profit. But in the future, there is still not yet other plan whether it will be reduced more. So for now, it's like 22%, yeah, from the net profit. And this 22% will be applied for revenue above 4.8 billion rupiah. So for company which still have revenue below 4.8 billion, it will be applied PP 23 as a final tax with rate 0.5% from the gross revenue. So this final tax of the PP 23 for the new company is only applicable during the 3 years in a row. It means after 3 years, although the revenue is still below 4.8 billion, then the company already needs to apply the Article 25 for the 22% from the net profit. here are the most commonly used withholding tax, because there are a lot of withholding tax in Indonesia. So the first one, we can see the article first two. So this is for building and space rental. So if we are renting office, as well as dividend interest received by the local individual with rate up to 20%. And the article 15, this is for the representative office or permanent establishment with rate 0.4% from the revenue. So this article 15 also interesting because I found out in the field, actually not all representative office is actually aware that although they are not generating revenue by the rep office in Indonesia, but the sales recorded or done through the parent company, not everyone aware that they need to pay the tax in Indonesia. So apparently, although the sales done by the parent company overseas, it's still applied withholding tax of 0.44%. And then Article 22, this is service provided by the local and foreign individual with the tax ID number. So this is basically employee income tax. And there are progressive tax rate applied, 5 till 30%, depending on the total annual income of each individual. However, with these new regulations, with this tax harmony also, so after the omnibus law, very recently in this month, actually, the government also introduced tax harmony. There are some tax regulation update. And then one of the update is for the employee income tax, there is additional bracket for 35%, which will be applied from 2022. This which will be applied with the annual income more than 3 billion rupiah. And for the import goods, Article 22, the rate up to 2.5%. Article 23, this is service provided by the local entity, as well as dividend, interest, royalty received by the local entity. The rate are varied to until 15%. But the most common, for example, service provided by the registered entity in Indonesia, it will be applied 2% of withholding tax. And lastly, the Article 26, this is service provided by the foreign individual or foreign entity. So basically foreign entity which are not registered in Indonesia, as well as dividend, interest, royalty, capital gain received by the foreign individual entity. And this is the rate is normally 20%. However, some rate which are arranged between with the foreign individual or entity, there can be some tax treaty arrangement. So if we will apply this tax treaty arrangement, the taxes can be lower. So for example, this Article 15 and 26 can be lower if we will apply the tax treaty arrangement. And with Singapore, Indonesia has also tax treaty arrangement. Now, the value added tax, the VAT, the subject basically individual or entity which produce, import, export goods, conduct trading, provide services, utilizes intangible goods and services from outside custom area. Entrepreneur delivers taxable goods and services, or individual receive the delivery of taxable goods and service and pays applicable taxes in Indonesia. The object, the delivery of taxable goods and services within the custom area, the tangible or the intangible taxable goods in Indonesia. Then this is the same. The taxpayer has the tax ID, monthly annual tax reporting, and using the e-filing system. The VAT, also known as the consumption tax, the company will be a VAT-able company if has a revenue minimum 4.8 billion. However, for company which requires to apply as a VAT-able company, they can also apply, although have not reached the 4.8 billion rupiah. So can be the VAT-able company by specific applications. The rate currently still 10%, but with this tax harmony has been confirmed will be increased to 11% in 2022 and further to 12% in 2025. As for the method, there is the VAT input and output creditability mechanism, and also the e-tax invoice or e-factur online application. Now, for the tax exemption, yeah, there are tax exemptions. The good news is for corporate income tax. So for small enterprises with annual turnover less than 50 billion rupiah or 5 million Sing dollar are entitled to 50% discount of the standard rate. It means if before we are talking about this 22% corporate income tax rate, so with this 50%, it can be applied 11% from the net profit. And for public companies with minimum listing requirements 40% and other conditions are entitled to tax discount of 5%. Also, if we have loss, it can be carried forward to maximum 5 years. For the withholding tax article 26, because this is mostly related to the foreigner, it will be applied 0% for service or cooperation rendered within the agreed time test between contracting state. With Singapore, we have 3 months time test, and then decrease to agreed rate between contracting states with tax treaty agreement after the agreed time test, and also applied for the other income. And this is the tax treaty between Indonesia and Singapore for most of the withholding tax. The time test 3 months for service and freelance. It means within these 3 months, it's still 0%. And then after 3 months, it can be applied this special rate based on the tax treaty agreement between Indonesia and Singapore. So for service or royalty, the normal rate for 20%. So with this tax treaty, can be lowered to 15%. For interest to 10%. For dividend, for holding company. So this is a shareholder with minimum 25% at the company. The rate decreased to 10%. And the portfolio dividend, which less than 25% share at the company, the rate is 15%. However, this reduced dividend tax rate only applied if the dividend is taxed in the country, in contracted state. So if Singapore doesn't apply the dividend tax, so it means it will be applied the normal tax rate for 20%. Now, the tax compliance. Indonesia implement the monthly and yearly and annual tax report, tax payment and tax report. So for the incoming and withholding tax, the deadline of the payment every 10th of the following month, the reporting every 20 of the following month, and for the value added tax every end of the following month. And for the annual report, for the company tax return, the payment and reporting the deadline by end of the 4th month of the following year. So it means on April following year. And the individual tax return, the 3 months on the following year. So it means on March, the deadline for the individual tax return, either for local or for foreign individual. This is transfer pricing, which will be applied to company which has affiliated party transactions. So the important is we implement this arm's length principle to implement the fairness in every transaction to record the value of every transactions. And the threshold is 10 billion transactions in a year. And then, yeah, it's applied other regulations by the Ministry of Finance as well. So basically in the transfer pricing documentations, yeah, that it will be prepared the master file, local file, and country by country report. Now, lastly, it's about the tax policies for the tech companies. So in here we pick up few most common tech companies. So the first one is the digital business, or in Indonesia we call it also PMSI, the perdagangan melalui sistem elektronik, or trading through the electronic system. So basically this is applied for digital business provider, which is the company facilitate or does trading whose transactions are carried out through a series of electronic devices and procedure. And here are the criteria. The first one is the company which has sales amount in Indonesia for more than 600 million rupiah per year, or 50 million per month, and or the company which has traffic for more than 12,000 traffic per year, or 1,000 traffic per month. So basically the company, even foreign company not yet registered in Indonesia, but if this company have fulfilled the sales or the traffic criteria, then classified as digital business provider, which needs to pay some taxes in Indonesia. So the tax implication, the legal basis is the Omnibus Law, Tax Harmony, Minister of Finance regulations, and also the regulation from the Director General of Taxes. The tax implication, the 10% VAT collection, which will be increased to 11% in 2022. And what is a bit different with the normal VAT payment and return, different with the entity registered in Indonesia, because the VAT payment and return conducted in the quarterly basis through an online channel provided by the tax office. So it means every quarterly the government or the tax office will identify some companies which have fulfilled the criteria mentioned earlier, and then they will announce this list of companies, and from the following month these foreign companies needs to comply with the taxation in Indonesia. So these are the digital business provider assignment. Yeah, so as mentioned earlier, that this is assigned in quarterly basis. However, the provider may also propose the assignment voluntarily as taxable digital business provider if not yet assigned by the tax authority. And then this is the list of companies which until now have been assigned. Yeah, so we have from Amazon, Google, LinkedIn, up to Tokopedia, Dropbox, TeamViewer, and so on. So basically, all these companies needs to comply with the digital business provider taxation in quarterly basis. Now these are the software and license. In general, there are 4 types. The first one, general use software like Microsoft Office or McAfee antivirus. This is classified as non-royalty and therefore non-taxable. And for the license, the one which has user license, this is classified as royalty, and it is taxable depending on local and or foreigner, would be 15% or 20%. And customized software, the software which created for specific need, not for public use, also applied royalty, the same 15 or 20% depending on the subject of tax. And the maintenance, all maintenance service rendered to ensure the continuity of the software utilization, classified as a service, and the rate is if it's a local entity would be 2%, if it's a foreign entity would be 20%. Because there are different tax rates, so to avoid the generalized tax implication, then it needs to be separated supporting document between the taxable and non-taxable part. Luckily, about the Fintech and Edutech as one of the hottest trend also now in this tech industry. But in general, there are not so special or so specific taxation special for this Fintech and Edutech. So for the Fintech, it's mostly regulated under the Financial Service Authority regulations, or known as the OJK. And then one of the rules is that the maximum loan per borrower is 2 billion rupiah. And then until now, for financial services, it's still not VAT-able yet. But from 2022, from the update from this tax harmony, it will be VAT-able. And for the Edutech business classified as digital business, so for the taxation will apply the same tax policy as the digital business provider. Okay, so that's all for the tax presentation. So now please allow me to just a little bit share about our company as well. We are Chekindo or Incorp. We are part of Incorp Group. Basically, if Chekindo, we are based in Indonesia and Vietnam. However, our group is headquartered in Singapore, with presence in 7 countries, providing the full range of corporate solutions like corporate compliance, accounting, taxation, incorporation, immigration, HR services, finance services, business advisory, and expansion advisory services as well. Yeah, so in total, all our group have more than 10,000 clients. Majority are international, and we have more than 450 employees in all our countries. Yeah, here are our very complex services. We provide up to 30 services. Yeah, and some certifications. Some also we do cooperate a lot with Singapore government institutions as well. Okay, that's all from my side. Thank you very much for your attention. I hope it helps to give you a little bit general understanding about the complex tax in Indonesia. And for more questions, I would be happy to answer you in the next Q&A question. Thank you. And now back to Ying.
Thank you, Nurmia, for the very comprehensive sharing. So to the audience again, a reminder to post your questions in the Q&A box. And if you would like to reach out to the speakers, you can always let me know. So our email is go-global@sgtech.org.sg. Okay, so now let's welcome Juan on stage. Juan is the head of data analytics at Jakarta Smart City, utilizing data to complement policy formulation and also improve the quality of public services. So by actively studying and analyzing complex and diverse urban data, his team aims to build an exciting and innovative digital ecosystem in Jakarta. So he is also leading the efforts to develop and align strategic partnership frameworks between the Jakarta Smart City, as well as other government agencies, business enterprises, research agencies, as well as universities. So let's welcome Juan, please.
Thank you for the introduction and welcome. And yeah, I am Juan, the head of data analytics of Jakarta Smart City. So I think we have heard the 2 presentations, I think touching the topics about taxation, including the technology taxation domain. So from my side, I will share a bit broader context about the technology readiness in Indonesia through the lens of Jakarta. And I have shared to the committee and other speakers and panelists as well. I think around plus minus around 11 Singapore time. I need to go for other presentation and internal meetings, so I apologize for that, but hopefully I can cover 1 or 2 questions, and yeah, I can present to you briefly. Yeah, so let me share my screen, and I hope everyone is able to see my screen. Let me know if my voice is not clear because I can't see the video, but I hope my—
Yeah, it's perfect. Thank you.
Yeah, thank you. Yeah, so this is the topic, Indonesia's tech readiness from the perspective of big data, artificial intelligence, and smart cities. So this is my business card. I think the committee can share my slides to the participants as well. Feel free to reach me via WhatsApp, email, and so on for further discussion. So this is the topic that I will cover for today. 3 subtopics. So the first one is the intro or overview about smart city. So you will be able to appreciate the context. And second one, I think the core content, which is the Indonesia's tech readiness. And then the last part is about the concrete involvement from our unit to the smart city in the context of the technology development in Indonesia. So for the first one, smart city overview, I think it is aligned with the vision of our city to be so-called City 4.0, whereby the citizen and government can work together to develop exciting solutions to solve the city scale problem. So the government is not only giving information or policy, but we want to hear the inputs from the citizens and we want to develop the solutions together. So this is our framework. I will not talk too much, but in the end, we want to support the vision of our city and our governor team as well to improve the development of our city and also the prosperity and happiness of our citizens. So based on that, we have 4 principles. The second blue circle from the inner circle: mobile first, system data driven, smart collaboration, and digital experience. So all our initiatives are based or derived based on these principles. So I will not cover everything in details, but I think these are some of the ideas and development and collaboration that we have been doing in Smart City. So we are not only focusing for our unit, but we want to build exciting digital ecosystem, ideally not only in Jakarta, but we can be a role model and can be impactful in national level, Indonesia, and hopefully the ASEAN region as well. So this is our journey. We want to build our smart city as data, as service, as platform, as a hub, and as an ecosystem. So there's a trajectory and a roadmap, and there are several indicators in the next 5 to 10 years to really evaluate and monitor our development and our success progress for smart city. This is data that I've been analyzing with my team, a lot of city scale data with other 200 government agencies in Jakarta, including taxation data, vehicle taxation, income taxation, and so on. Especially since last year, we are dealing intensively with the COVID-19 situation. These are some of the dashboard. One of the example that I'm really proud is about this performance dashboard. So now across 200 agencies, across department, we can see their KPI, we can see their performance, and it has been reviewed regularly, let's say on a weekly basis, to really monitor the progress across Jakarta government agencies. This is some of the dashboard that we built for COVID-19, just for example. Yep, so I think that is the glimpse, yeah, or the brief overview about smart city and what we have been doing. So now is the key content for today, which is the Indonesia's tech readiness. So I divide into several groups or domains, let's say like big data, smart cities, artificial intelligence, and internet economy in general. So the first one, for data, I think, sorry, it's in Bahasa Indonesia because it's from the ministry, across ministries in Indonesia. There's one presidential office as well who has started this, which is for the One Data Initiative and also One Geospatial Map Initiative. In short, we want to enforce the standardization, the metadata, and then the integration of data from multiple domains. So it will be easy to really see and formulate policy based on the data. For sure, it's not easy, it's not straightforward. It will take years, maybe 5 years, 10 years to do this kind of integration, development, and so on. But I think in terms of the presidential policy, there is existing one data policy, and also for the geospatial, we have been doing something similar. So in short, we want to ensure we can provide the geospatial analysis towards one map policy. I think that's the idea. And for artificial intelligence, I think Smart City also contributes to the National Ministry of Infocom, whereby we want to support them in terms of the Indonesian vision for the artificial intelligence, covering several key sectors. This is Bahasa Indonesia, but let me highlight for you for health services, bureaucracy reformation, education and research, for food sustainability, and also for mobility and smart cities. So based on this, we need a good foundation, and we need a good infrastructure and digital talents. I think this is the roadmap for artificial intelligence. And then moving forward, I think based on various research, I think this one is from Microsoft, I think there will be certain improvement in terms of the rate of innovation and then the rate of employee productivity gains in Indonesia if we apply properly our AI strategy, both in government and also in the industry. So for smart cities, I think we are also included under ASEAN Smart Cities Network. I think there are several pilots for smart cities across ASEAN, and I think we are happy to really share our journey, our knowledge, our learning as well with other ASEAN cities and countries. And again, we are not only stopping within ourselves, but we want to collaborate and we want to relate with other smart cities in the national level. Because in Indonesia, we have the plan to have 100 smart cities, and I think we should learn from one another. We should connect with each other, and then we should assess and also share the case study about our development model, right? So this is another comparison between Jakarta and Bandung, and then in terms of the stakeholders, about the partners, about the way we develop our smart city, and so on. So there are several research and case study about this as well. And for sure, in the future, we want to support our movement for 100 smart cities that can support various domains like economy, governance, infrastructure, environment, people living, and so on. About the internet economy, I think from the first presentation, we have heard also about the trajectory of the potential of the Indonesian economy and specifically technology or internet economy. So based on certain domains like e-commerce, online travel, media, ride-hailing, there will be exciting trajectory, especially for the e-commerce domain. And as you can see, the market and then the companies are already maturing. I think it's already good. And moving forward, we should explore new domains to be explored, let's say up to 2030s, 2040s, and so on. This is some of the summary. I will not cover in details based on certain research, IMF, from the World Bank, Global Web Index, and so on, to highlight the exciting trajectory for the internet development, the mobile usage, and also the e-commerce and the digital economy in Indonesia. I think this is one of the highlight also from the investment agency in Indonesia to highlight the potential of Indonesia as a country from the GDP perspective, annual GDP growth, population, internet users, investment size, right? But again, on top of these statistics, I think the one that I really want to highlight is how to support this, how to make it scalable, and how to realize this. That's why in my next slides, I want to highlight my involvement in Smart City, especially in the development of the roadmap, in the preparation of the digital talents, and also how we can support the ecosystem in the more macro level. I think that's the way Jakarta Smart City should evolve. We are not only thinking about Jakarta, but how we can be a good case study, a good role model that can be applied across other cities, across other domains, Indonesia, and hopefully in ASEAN region as well. So some examples, we are working with Jakarta-Berlin collaboration to build innovation hub, and we want to nurture our local startups as well. And we want to have an open collaboration with other researchers, with other countries and so on. So this is one of the example. And we also have incubation idea as well. So we share our data via API, and then we want to have to empower the certain startup technology companies locally in Jakarta, Indonesia, to deploy certain solution and how we can ensure there's a good initial pilot that can be scaled up in the future. So I think that's one of the idea for the innovation lab. And these are some of the ideas for Jakarta, whereby we have like reading group, research group, data science training, Jakarta Sandbox Lab, and so on, how we can ensure that we can build exciting digital ecosystem in Jakarta, Indonesia. And I think I'm happy we have more and more interest from the data science training, from the local startups, collaborators, and so on. Lastly, this is my last slide about Jakarta Smart City Super Apps, whereby we want to integrate the key services out of 200, 300 agencies in Jakarta, and also some of other partners in the industry, tech companies, and so on, so they can access the services via our Jakarta Kini Super Apps. So this is some of the upcoming features for Citizen ID and also for payment, let's say for tax transaction as well, and then for the document processing, approval, and so on can be done via the super apps. So I think these are some of the other services that has been integrated when we collaborate with other platforms, including some of the unicorn companies in Jakarta and Indonesia. So now let me stop my screen sharing and share my closing statement. So again, in summary, I think there is exciting trajectory and development of the technology and innovation in Indonesia, especially after the trigger from COVID-19. I think many companies, government agencies, we are being triggered and encouraged to think more innovatively and how to find a better way by leveraging technology. And again, I think in terms of the taxation readiness and then the model, I think there will be a lot of improvement and how we can work more closely with other tech companies and how the government can support the innovation and then also the business scalability in Indonesia. I think representing Jakarta Smart City, that is my highlight and presentation. And I think I only have around 1 or 2 minutes. I don't think I can answer further question. Really apologize for that. But hopefully my presentation is good enough to give you certain trigger. If you have any questions, I think you can pass to the committee. I am more than happy to follow up via written communication, or you can always reach me via LinkedIn, email, or direct WhatsApp communication as well. I think that's all from me. I'll pass it back to the organizer, Agustina, to Ying. Thank you.
Thank you, Juan, for the very comprehensive presentation as well. And so sorry that we can't have you for Q&A, but we will definitely pass on any questions to you post-event. Okay. Now let's welcome the rest of the panelists back on stage. And okay, bye, Juan.
My pleasure. Thanks for the invitation, and hopefully we can have another upcoming session. Don't hesitate to reach me as well. Thank you all.
Okay.
Nice to have a session. Thanks for all the panelists and presenters as well. Thank you.
Bye, Juan.
Bye. Thank you.
Okay, so we do have some questions that came in on our Q&A box.
I
So
saw
maybe
that they were all for Bu Nurmia. This is fantastic. This will be the easiest Q&A for me yet. Everybody wants to learn about tax.
No, there is for you also, Joel. Don't worry.
Okay, don't worry, Joel. I'm sure there'll be questions for you coming in later as well. Okay, so Punit asks, so she's a Singapore software solution development company in the ICT sector without an office in Indonesia. So she's asking about the incidence of taxes on such companies that are doing businesses in Indonesia. Are they subjected to withholding taxes, VAT, or other taxes? So even having the FTA as well as the double avoidance tax policy between Singapore and Indonesia, is the withholding tax still applicable? Yeah. So Nurmia, please.
Okay. Yeah. So there are two type of the business. If the software would be sold like a digital business, like before, it means through the online sales or e-commerce, so it will be applied the digital business. However, if it's the normal software sales, it will be depend on the type of the software. So as presented before. Yeah, so for example, if it's a customized software, it will be applied the royalty, right? Or if it's maintenance software, then it will be applied the service as a service. So basically, although the company is not registered in Indonesia as a foreign entity, when doing business in Indonesia, it will be applicable the withholding tax. And for the VAT, the buyer or the customer which needs to pay to the tax office.
Okay. Yeah. And the next question for Nurmia. One of your slides showed that the rep office can be buying and selling agent. Would you like to explain on this?
Yeah, sure. Yeah. So for the rep office, yeah, one of the activities allowed is as a buying or selling agent. It means the representative office will represent the parent company overseas in Indonesia, and then the rep office can help the parent company to do the promotion or marketing the product, or to find a distributor, or to find the buyers. However, the main limitation is representative office is not allowed to generate revenue or to do sales directly. It means once there is order from the customer, then the quotation, the invoices needs to be issued from the parent company directly to the customer. Yeah, and then the customer also needs to pay directly to the parent company. So the rep office cannot facilitate the payment.
Okay.
But for the rep office also can, because there is also another question. Is there a criteria for foreign companies who want to set up a rep office in Indonesia? Can rep office hire foreigner? Yeah, the answer is yes. That the rep office can hire foreigners. So one of the requirement is to appoint chief of representative office, right? This chief of representative office can be a foreigner as well. But then this chief, the CRO needs to have a work permit in Indonesia and stay permit, the KITAS in Indonesia, to be able to legally represent the rep office. And then besides the chief rep office, also rep office can sponsor another maximum 2 foreigners. So basically can, but the quantity cannot be a lot.
Okay. let's take the heat off Nurmia for a while and go to Joelle. So Joelle, there's a question on your view on indirect investments through the collective investment scheme, since this would create easiness for foreign investors to invest in Indon through fund. Then the fund will set up a PT to accommodate the investors aim to enter certain businesses without dealing with all the taxation administration issues. Yeah, any comments on this?
Thanks very much. So, yes, it's common to invest in Indonesia via funds, not just via collective investment trusts, which is what the question mentions, but also private funds as well. Venture capital funds you might have heard of are investing heavily in Indonesia. In fact, 81% of all assets under management in Southeast Asia are now venture capital, are now managed by venture capital fund managers, likewise private equity funds. Why do people invest through funds? As you correctly point out, funds, well, the Singapore government has put in place a very conducive regulatory framework for funds, not least among which are these very attractive tax incentives for fund managers. So if a fund manager were to apply under Section 13R or 13X of the Income Tax Act in Singapore and met certain eligibility criteria, all of the proceeds of investment would be free of tax in Singapore, which means the fund doesn't pay IRAS any tax. However, the fund is just like any other foreign investor, and in investing into Indonesia is subject to all of the usual tax liabilities and tax obligations as a foreign investor is. It doesn't mean that there are no tax obligations on a foreign registered fund manager. It just means that as an investor into the fund, these obligations are removed from you. So you don't have to worry about paying Indonesian tax. Your fund manager has to worry about paying Indonesian tax. But then your fund manager charges you a fund management fee. And if you invested in private equity or in venture capital, then your fund manager charges you on top of that carried interest of 20% of any upside he makes on you. So it really depends. It's horses for courses. This is not a, I'm not an investment professional. I'm not here to recommend you products, investment products for your portfolio. But the fund, it's, fund investing through funds is something that has become quite popular, certainly in the technology space. Funds in Singapore are subject to, but not for, not because funds in Singapore have any material advantage in terms of Indonesian tax. I hope that answers your question.
Okay, thank you. And also another very interesting question. So how do companies deal with potentially unlawful requests from their business partners in Indonesia? So for example, requests to submit bribes.
Oh my goodness. As a lawyer, I'm duty bound to tell you that you must entertain no such requests, okay? Look, what's a good way of putting it? These requests must not be tolerated under any circumstances. The world is becoming a place where there are fewer and fewer safe havens for these sorts of unlawful activities. Now, many of you would have heard that, if you go and do business in not just Indonesia, but any other third world country, you must be prepared to pay bribes and make facilitation payments and coffee money and so on. Now, let me tell you that that is entirely untrue in the context of Indonesia. Okay, if you dealt with, look, as a foreign investor, who are you likely to deal with? Who are the government regulators you're likely to deal with? The Investment Coordinating Board, BKPM, the Central Bank of Indonesia, perhaps a sector regulator. And all of these, I can assure you from personal experience, are absolutely 100% above board in their dealings. No one from BKPM is going to come and ask you for an envelope of cash. Okay, so you can rest assured. And if any of your Indonesian partners is telling you that, well, then perhaps you should consider another partnership in Indonesia. So as a lawyer, I can't say anything else other than you need to comply not only with the letter of the law, but also scrupulously with the spirit of the law, especially in matters as serious as these. All right, thank you.
Thanks, Joel. Okay, so back to Nurmia. Is there a need for companies to set up in both Java and Sumatra? I think these are the key islands, right, for Indonesia. If not, what are the incentives to favor one over the other?
It will really depend on the business field, actually. Yeah, because both areas are very attractive, very interesting, and offers different opportunity. Yeah, so I would say it really depends on the business field and the requirements. However, one of the most common office or company then to set up the head office in Jakarta. Yeah, because of the usually more easy administration, more centralized licensing. Yeah, however, it really depends on the business field. Yeah, if it's mining or if it's plantation, forestry. So yeah, and then in regards to the tax policy in general, also it is very similar. Yeah, so we need to look deeper on the specific business field in this case. Yeah, but in general, the government is not differentiating the tax regulation based on the area, unless, for example, it is this kind of specific area, yeah, like Batam, or this kind of specific zone, industrial zone, yeah, which may have some additional tax policy.
So is there anywhere that companies can find out about these tax regulations? Are there any documents circulated in English that companies can have access to?
As for the official regulations issued by the government, until now it's mostly still local in the Bahasa Indonesia language. However, yeah, there are some consulting companies or law firm which are translating these regulations. So yeah, depending on the regulations, if it's more general, most likely we can always search online, or you may then ask to your consultants or lawyers, yeah, for these translated regulations.
I see. Okay. So I guess for Pandu, if you are interested, you can also reach out to Nurmia and also Joel for them to advise you further on the specific questions, right? Okay, so I see a startup question. So asking about the employee stock option, whether this has any implication on tax in Indonesia, if they were to issue their employees with stock options. Yeah.
Yeah. So it will be applied like an employee income tax. So this will add their income and then will be treated as a bonus. Then will be applied or charged the employee income tax, the Article 21 as a bonus. And then when the tax will be and then when the share will be sold, and if there is a capital gain, later on also there will be tax in the capital gain.
So perhaps I can add a little to the discussion as well. We advise our clients and their employees routinely on ESOP matters. And the position is the same in Singapore. If you receive an ESOP in Singapore as a result of your employment or in consideration of your employment or your contributions at the company, then this is regarded and taxed as employment income in Singapore. The difference between Singapore and Indonesia is that Singapore doesn't impose capital gains tax. So by and large, and especially for venture-backed or institutionally backed companies with institutional investors or including venture capital investors on the cap table, the preference is for these Indonesian tech businesses to be held under offshore holding structures, which are more tax efficient. Now, having said that, because there are no Singapore doesn't impose capital gains tax. There are a number of steps that we can take to perhaps enhance or improve the employee's tax position. I'd be very happy to have a conversation with you after this call, to talk through some possible structures for your employees and indeed for yourself. But ESOPs are very common, and I think it's right. Their income, so they should be taxed as income. Although there are ways of I suppose, timing the payment of these tax and structuring the issues of these ESOPs in a way that makes sense for you and your employees.
Okay, thank you. I see Pumi has come back with another question regarding withholding tax. So she's asking about the process, whether it's easy or complicated. Yeah, and what percentage of the withholding tax will be returned to the non-resident foreign company?
Yeah. So if it's withholding tax, normally the business partner will provide the proof of tax cut to you. And then if it's applicable in your country, then you can credit this withholding tax to your tax in your origin country. So it is more like the withholding tax which has been deducted can be used to deduct your tax in your home country if it's applicable by your country. So it is not like refunded. Yeah.
Okay. So yesterday there was also a question regarding royalty fees for tech companies. So would you have any comment on that? If a Singapore company were to sell their software license, would there be any royalty fees being charged?
Yeah. So there is a royalty fees. So if it's a Singapore entity, so it will be applied normally 20% or 15% with the tax policy, with the tax treaty. Sorry.
Okay. I see two more questions for Nurmia. So regarding Article 23, tariff and its object. Yeah.
Yes. Yeah. Yeah. So it will be for the Article 23. Yeah, there are many type of activities which are subject to this tax. Therefore, there are various rates also. So, for instance, one of the most common one is the 2%. This is applied for services. So, for instance, you have registered entity in Indonesia, and then your company provides services to other company. Then your service would be subject to withholding tax Article 23 for 2%. As for the 15%, it's applied for the royalty. Yeah. If you sell the software or the license.
So for individuals, if they were to purchase products online from companies that doesn't have a presence, do they still have to pay tax?
Yeah. So this is connected with the digital business provider that I presented earlier. So although the company doesn't have presence in Indonesia yet, but the government monitoring the activities from the from the sales volume or from the traffic, the website traffic. So if this company fulfill the criteria, so the government will send letter to this company to register as a taxpayer, as a digital business taxable digital business provider, and then they need to comply the following month. And this is arranged. The tax is paid in quarterly basis through an online channel. So the tax authority will share the link to manage the payment, the tax payment.
Okay, thank you.
It will be paid directly by the company to the tax office.
Okay, thank you. All right, I see one question for Joel. So I think this is about tax avoidance, double tax deduction. So does Singapore allow Singapore companies to offset any tax paid to foreign governments? To be
one for Bu Nurmia, I think, rather than me. What does the double taxation treaty between Singapore and Indonesia say, Bu Nurmia?
Yeah. Yeah, so there are some tax which there are some tax treaty in Indonesia. So for example, if it's the normal is the service provided by the Singapore entity in Indonesia, normally charge 20%, Article 26. However, with the tax treaty, it can be reduced to 15%. Yeah.
Okay.
There's
I
an
don't see
interesting
any.
question. There's an interesting question on Indonesia's smart city implementation and what are some gaps that Singapore companies can plug into. And of course, Juan would have been the right person to answer this question. But Bu Nurmia, if you'd like to volunteer an answer, I've got a few. I'm currently working on some interesting technologies in Indonesia. Now, if this is a predominantly Singaporean audience, then one of the impressions that I would like you to walk away from this webinar with is that Singapore has, over the years, accumulated an extraordinary reputation in Indonesia, built up an extraordinary reputation in Indonesia for its excellent urban planning. And there are opportunities here for businesses and technologies of all stripes in the smart city space, and these could be as diverse as high-tech construction techniques to applications like security, to smart locks, for example. Or screening solutions for COVID-19 infections. I mean, the applications in here are just endless. And of course, Indonesia continues to urbanize at a rapid rate, right? You heard earlier on in Juan's presentation that I think we might now be past the tipping point where most of Indonesians live in urban environments, and it's only going to increase. There was talk some years ago of Indonesia moving its capital to Kalimantan from congested and from congested Jakarta. Now, I'm not sure how likely it is now that the pandemic has thrown a spanner in the works, but this is a conversation that continues. As more Indonesians migrate into urban centers, they need to, the municipal governments, central and municipal governments, need to develop solutions for ever expanding urban populations. And this is, these are problems that Singapore companies have sought to address. And Singapore companies have built up a good reputation for addressing these problems, or successfully addressing these problems. So if you're in this space, I urge you to explore opportunities in Indonesia.
Anything to add on that, Nurmia?
Yeah, let's say I'm from the Indonesian point of view. Obviously, we see Singapore as a country, it's really a developed country. And then if talking about the urban living or the urban planning, how the city or the country is structured very well, and high technology. Obviously, we believe that Indonesia can learn a lot from Singapore, and then we would be very happy to collaborate more with Singaporean companies on how we can develop a lot of cities in Indonesia even more. Because even Jakarta itself, there are still so many spaces for improvement, right? If we see, I believe because Joel also has been living sometimes here, so even just 5 years of difference, we see a lot of improvement in Jakarta itself. How the city much more also developed, much more roads, much more, also more beautiful now, more greens. So yeah, so the government also adopted a lot of good case practice from the other countries. And then besides Jakarta, then definitely there are, I cannot mention how many cities are huge opportunities. Yeah, one of it, of course, this should be the new capital city, which before started the development, and looks like now the government even refreshed this idea again with some, maybe because some a little bit more, let's say, not so positive news from Jakarta. So they probably wants to again to refresh it, to make it more happen. So definitely it also in this Kalimantan, this Borneo are one of the biggest island, right, in the world. So yeah, a lot of opportunities, and not to mention any other islands, right? Indonesia has more than 17,000 islands.
That's right.
Yeah,
That's
for
right.
living,
No,
for tourism, for business industry, for many things. Yeah.
just
And thanks
listening
to
to
this
you,
250 million
say
people.
that, just listening to you say that, and how Jakarta has become more green and more gentrified over the years really makes me miss Jakarta. I lived in Jakarta for 6 years leading up to the pandemic. These days, you know, now that I spend much less time in Jakarta, certainly not yet 183 days in Jakarta every year, I develop these strong emotions when I think about Jakarta and about walking down Sudirman on, you know, car-free day on Sunday, or going for a walk around, you know, GBK, which has now become very gentrified. I mean, that's all something that I can only, you know, that I can only miss from you know, from across the pond, and I look forward to when we can start traveling again.
Very soon,
Okay.
because the trend is decreasing here.
Fingers crossed, inshallah.
Okay, so I do see one more technical question. Maybe we can take this offline with Pandu. I think he has been also asking quite some similar questions as well. All right. So I think other than that, we don't have any.
Sure. Yeah. I think I agree, because this question from Pandu is quite technical. But I would be happy to have further discussion offline after this. So feel free to write an email, and then we can have further discussion there.
Okay. Any last comments from the panelists to the audience?
Invest in Indonesia today. That's my comment. Look, the reality is Singapore is a hub for Southeast Asia. That's one of our key strengths as a market, right? When I go and talk to audiences in Indonesia, I say, oh, Singapore is a country of 5.5 million residents, 3.5 million Singaporeans, and they all laugh at me and they say, that's not even the population of Tangerang, it's the population of South Tangerang in Indonesia. So Singapore exists as a hub to serve the regional market. And if you look at Southeast Asia, the largest market is Indonesia, and it's right on our doorstep. So it always astounds me when I speak with Singapore businesses, or indeed international businesses when I speak with Singapore businesses, that there is not more of a coherent, well-articulated strategy for Indonesia. This is different, for example, when I speak with many multinationals. They're in Singapore because they want to be in Indonesia and the regional economies, of course. But Singaporean businesses have, you know, I think I would encourage all of you to look beyond our shores in the first instance, but also specifically at Indonesia, just for the extraordinary business opportunities that it brings. And as I mentioned earlier in my presentation, there is probably no better time to do it than now. At no other time in Indonesian history has it been so had the regulations been so conducive for foreign investment in general, and Singapore investment in particular in Indonesia.
Sure. And adding to that, definitely I second this, agree 100% or 1000% to invest in Indonesia. And also, if we are talking about tech company, Indonesia also, I believe, one of the promising market, besides the very huge population, more than 250 million. So definitely, and the people have like to buy something new, quite consumptive, and then the buying power also increasing. But also, even now into 2021, there are 6 unicorn in Indonesia, right? Like from Indonesia. So yeah, so that's a quite, let's say, quite a very high achievement also for the tech industry in Indonesia. Yeah, how the local tech can grow into this unicorn. I think the most, let's say, in the Southeast Asia region.
6 unicorns in Indonesia, and many more unicorns besides who became unicorns because of Indonesia. If you look at Grab and Lazada, these are not Indonesian unicorns, but these are unicorns that, because of their...
Thanks to Indonesia. Yeah?
Exactly, because of their very successful Indonesian strategy, have become unicorns. Indonesia is the largest market for these regional technology majors. So if you're Singapore tech and you're not looking at Indonesia at all, then I would encourage you to do that today.
Feel free to contact us for more
Absolutely.
information. Definitely, we'll be happy to assist you.
So to the audience, if you would like to be linked up with the panelists, just drop us an email, drop SGTech an email, and we'll do that for you. Okay, so now I would like to share some upcoming activities that we have with our audience. So next week, we'll be doing a business matching with China companies. So if you're interested to find out more about this event, you can go to our website to take a look. We have some companies that are already signed up with us for this event from the China side. And also after this Indonesia series, part 1 and part 2 yesterday and today, we'll actually be doing two more markets covering Vietnam as well as Thailand. So like what Joel mentioned, Singapore, is really very small and we should be looking outwards. So besides Indonesia, there are also other opportunities in the region that you can consider. So if you're interested, do sign up for all these free webinars as well. And if you're looking a little bit further, we're actually doing a Singapore Pavilion in Turkey Mobile Fest. It will be a hybrid event, but the Singapore Pavilion will be a virtual one. So this is also subsidized by Enterprise Singapore. So Singapore companies, if you are interested, you can also check out our website to find out more about the subsidies available for the Singapore Pavilion. And of course, for cybersecurity companies, there is a Zero Trust Future webinar covering different areas of cybersecurity, endpoint security in today's critical modern day threat landscape. Okay, so last of all, do fill up our webinar survey. Give us your comments if you have any interest to partner with the consultants, lawyers, or want to reach out to any of the speakers. Do drop us an email. So all these links are also available in the Zoom chat. So do follow us at SGTech, LinkedIn and Facebook so that you can stay tuned to our activities coming up for you. All right. And once again, thank you very much to the panelists today for your very engaging and candid discussion with our audience. So if there's any development, any Singapore companies interested to reach out to you, I'll definitely connect them with you. All right. Thanks again, Nurmia and Joel.
Thank you.
Thanks everyone for your attention. Take care.
Yeah.
Stay safe,
Thanks,
everyone.
everyone.
Stay safe.
Stay
Bye-bye.
healthy. Bye.